after what has been quite a challenging year for them. We also have Hemang Jani joining in to talk about individual stocks. Hemang, before we get to some other stocks that you are recommending, any thoughts on multiplex names like PVR as well as Inox?
Good afternoon, Rima. I think we've seen some revival in the sentiment following the box office response to names like Drishyam 2, Kantara, and with the Avatar hitting the theaters, there is definitely some excitement. But our take is that this entire space is going through a lot of disruption because of the OTT and the fact that we didn't have a very strong pipeline of blockbuster movies. So I think having seen a strong run-up in the names like PBR, we think that it would make more sense to focus on some of the other sectors where there is a slightly better, growth visibility with valuation comfort. I think you might go through a little bit of, uptick basis the response to certain movies, but on an overall basis, I think this sector is not looking that encouraging given the disruption which is there.
Absolutely, and there is, Nimesh was telling us earlier on D Street Chatter that there is perhaps a big block which is coming as well. So we will see. This windfall tax cut, today, of course, stocks are down. I mean, ONGC is down a little bit, Reliance is down a little bit, but this does provide some tailwind, especially for ONGC, doesn't it? Because essentially what the government is saying that till 75, 80, we are okay. But ONGC stock is pricing actually closer to 40 than even $50 right now. What's your sense, Hemang?
So clearly, the relief is there for the upstream companies like ONGC, Oil India, and to some extent Reliance. But we have to also reckon that for some of the companies, you have many other businesses, particularly the refining part. And that would have a lot of variables attached to it because there is a sense that the GRMs would be capped for Reliance, let's say at about $12 to $14 per barrel. So we think that given this intervention by the government, it would make more sense to focus on some of the city gas companies where the relative uncertainty is less and you have a good volume growth story with some stability in the margin. So I think Gujarat Gas or IGL are relatively better placed in that space compared to a ONGC or a Reliance.
Pull up PI Industries. In the last 1 month, we've seen the stock rally from levels of 3,200 all the way up to 3,500. PI Industries 1 month chart, and you would see the stock has been slowly trending higher. Hemang, any stocks? Any recommendations? Any thoughts?
So very strong positive view on PI Industries, and we had a recent management meeting with them, and what is coming out from there is that more than 40 products are at a different development stage, and there are almost about 15 new inquiries in the first half, and 25% are from the non-agri-chem space. Apart from that, the company is moving into pharma, apart from this agri-chem space, which would provide some additional revenue stream for them. So we think that this is one of the few companies where you're more comfortable with the quality and the earning visibility both. So very strong positive view.
You like tire names as well, Hemang? Which ones?
Sorry, Prashant, I missed your...
sorry, tire stocks.
Yes, so tire stocks, I think overall, if you see names like C8, there is some sort of a cyclical recovery, and that would definitely bode well for some of the tire names. Along with that, some of these companies have built in additional capacity and the raw material prices have actually gone down. So we do think that tire provides, good visibility for next couple of years with some improvement in the margin. So both C8 and Apollo Tires are our preferred picks at this point.
Okay, all right, Hemang, we'll leave it there. Thank you very much for your time. Good speaking with you.
Thanks.
And we'll speak again. By the way, the market's pushing